Hello, my name's Stuart and this is Scotland FX. Thanks very much for joining me on this video. Just a small channel at the moment. As you can see, I have just 59 subscribers. Obviously, we'll look to grow. I will have to do way more content, obviously. I've been a bit lacking in content, to be honest. I've been doing a lot of other things over the last couple of months. Got a little bit disheartened, I'll be honest, with trading in general. I think I spent a lot of time and money developing a trading bot which can work, has the ability to work, but requires way more work, and I wasted a lot of time on it. And as a result, I ended up failing an FTMO challenge that I was actually very, very close to passing, and that kind of discouraged me. In saying that, however, I spent a lot more time developing my manual trading strategy, one I've been using for years, but just really try to take it to another level so I can have better consistency, not only for my personal accounts but for my FTMO, because I am looking to within the next day, maybe even today, buy into the FTMO challenge again. So I want to show you what I've been doing. I'll show you my strategy and how it works. First, let me switch screens. I'll let you look at my FTMO. This is my trial. This is their demo account. Basically, it's active for 10 days. They want a minimum of 5 trading days, and they want you to hit 2,500. Well, they don't want you to. This is, assuming you could do that 5 days minimum trading, 2,500, then 10 days minimum trading, 10%. That's 5%. So if you could hit 5% in 5 days, minimum 5 days, you should be able to hit 10% in a minimum of 10 days. There, so goes the theory. What I've actually done is try to treat this like a challenge account, and I'm going to trade it for 10 days anyway and get above 10% so that I know I would pass the challenge. Now you can see it's actually gone quite well. I've been trading 6 days so far, so that's passed. Minimum of 5 has been achieved. Maximum daily loss, you're allowed 2,500. I've only done maximum daily loss has been 307 drawdown, or equity loss if you like. So again, that's my max loss is exactly the same. Profit target, minimum 5 trading days is 2,500, and I'm actually at 4,462. So blew that out of the water. I'm wanting to get that to basically 5,000. So it's 10% of the 50k account within the 10 trading days. So I know I could pass the challenge basically. You got 22 trading days, but it's a minimum of 10, because ideally you'd pass at that minimum so you can move on to the next stage faster rather than waiting a full month to do it. So you can see my equity curve has been really, really nice. One small loss in here, I think it was $123. Other than that, it's been just continual growth. So if I come down here, you can see on day 1, 2006, it says day 1, actually it was day 1 and day 2 combined, because it opened one day and closed the following day, so I don't know how it actually works the amount here, but basically this has been my equity growth, if you like, or my profit. So there's 2,600, just over 1,000, minus 126 it says, it's including commissions, plus 136, plus 325, plus 442. Could have had more, to be honest, over the last couple of days. I closed trades early rather than letting it hit TP, just because I didn't have to. I mean, I kind of, to be honest, I should have, because I would have been over 10% right now. So, but I was having to leave. I'm trying to do this manually. I was had to leave and was going to get back for hours and hours and hours. I was in profit, so I just closed my trades and took my profit, which isn't always a bad thing. So you can see that if you actually look at my stats, number of trades 9, total of 24 lots near enough. My average risk to reward 4.5, which is great, 4.53. Profit factor is 36.21. My win rate is 88.89%. So 8 to 9%, nearly 90% win rate. You cannot argue with those statistics. So we see my trades. There was 2,000 profit. Lot sizes are fairly consistent. Few smaller lots. These are ones I was speculating. I've got to be honest. I was speculating. This one was 1/4%. The setup wasn't brilliant, so I'm learning if it's not brilliant, then don't go in. If you've got the perfect setup, take the perfect trade size, take the perfect position size, maximum 1%. Or to be honest, if it's absolutely perfect, it's a maximum 2%, which is what this was. This was a 2% trade. So as you can see, it was a 1 to 2 risk to reward. It hit its 2 risk to reward factor, and because it was based on 2%, it was 4% growth on the account, which is just fantastic on one trade, but that was just a perfect setup. When it's been less than perfect, I've had less than the perfect position size, so that's like 1/4%. This was 1/2%, that was 1/4%. So 1/2%, that was a full percent, full percent, a full percent. However, in saying that, I closed them out early. That one nearly hit 1%. These ones I closed out early. You see that was 0.34, well, whatever it is, 0.6%, and that was 0.35% or something like that, just to take the profit, because I was in profit anyway, and had already met the minimum requirements of what was expected in the trading account and this demo account. So so you see some really nice trades. One day, one trade loss, the rest have all been winners. So I must be doing something right. So what am I doing then, which is giving me these numbers? So make sure I'm on the correct screen. Okay, switch back to the screen, switch back to my charts. Can we see the charts? That looks good. So yeah, how am I trading then? What am I doing? I'm trading the London session, which is denoted by these green columns here. The reason I've got them high, obviously I don't need them because I sit down at the beginning of the day and I know I'm in the London session. But I've got these actually in place for when I'm back testing this strategy, because if I see a perfect setup here, for example, when you're back testing, if you're not looking at dates and times, there's no point taking this trade if it's at 3 o'clock in the morning and you're back test, because you would be asleep, you wouldn't be around to see this trade. So it's not a realistic back test if you're saying, oh, there's a perfect setup, and you're putting that into your back test. And even if you win, you go, oh great, I've won a short position here, bang, you stick in a short position here because your trading strategy tells you that's your back testing tells you that's the perfect setup. But if you look at it in real life, I'd never have taken that trade, because that's in the middle of the night for me. I would be either going to bed or in bed, and I wouldn't actually have taken that trade. So back testing, I don't want to, even if I see a perfect setup, if it's not at least after this call, I don't mind it being a little bit after, into the New York session, for example. But if I'm talking about over here and saying, oh, there's the perfect setup, but you're looking at that and it's like 4 o'clock in the morning, there's no way in real life I would have taken that trade. So I don't want to be taking it in my back testing. So these columns are just so when I'm back testing, unless it's after, maybe a few hours after the London session, it's absolutely fine. I will trade up to 6, 7, 8, 9 o'clock at night, but after that I just wouldn't be trading. So I don't want to be taking trades that really wouldn't exist for me in real life in my back testing. This is Euro GB. I'm only trading a 1 hour chart. I'm not looking at higher time frames for bias. I can zoom right out. You can certainly switch to 4 hour, but if I zoom right here, and I don't have to go and look at the 4 hour daily. Any confusion about the trend? Any confusion at all about the trend? No, we're in a downtrending market, so we know my bias should be for shorts rather than longs. That's it, done. That's it. I'm just looking for shorts, and that's it. End of story. That's all I'm looking for. So what are my trade conditions then? Let's pull this up. I'll switch screens quickly to let you see what I'm doing. So hopefully you can see that okay. So trade setup, asset must show a clear trend on a higher time frame, or you just zoom out, you don't need to look at the higher time frame. Only trend with the trade, absolutely. Only trade with the trend, I should say. Wait for a pullback to a key level. So this is what we're going to discuss just now. Must have a correlation of supporting factors of the trade, i.e. key level is at a key support resistance level. Price action on the entry time frame is expected to move in line with the overall trend, so I'm not counter trend trading. Price action is supported by a key fib level. We'll get to that in a second. Must have at least a 1-to-1 R-to-R opportunity at a minimum, or don't take the trade. Entry rules: will not risk more than 1% per trade. Cumulative, oh no, I just showed you that I did take 2% on my demo on my very first trade. Perfect setup, but I'm being more conservative for what I'm going to be doing that with the actual challenge account, so I will take a little bit longer. However, I feel that will make my equity curve more consistent. A cumulative risk across multiple trades will not exceed more than 2.5%. So what that means is if I'm in a trade, and I'm risking 1%, I take a second trade, so I'm risking 1%, so I'm risking potentially 2%. I can't take more than another 0.5% risk to reward risk trade with stop loss more than 0.5% basically. You know, if this is down already, say what first trade's down 1.5%, and open up another trade with a potential risk to reward of at least, you know, 1 RR, which is what we've got up here. But again, wouldn't risk more than 1% because overall my risk on the table at that point is 2.5%. I'm not going to risk more than 2.5% a day across multiple trades. First trade's up 3%. Well, that means I can take a lot more trades. But you know, based on if I'm taking 2 or 3 trades at the same time, I've got to make sure my overall cumulative risk is not more than 2.5%. We'll only scale into a trade when the stop loss can be moved to break even. So once I've been able to move a trade or a position to no risk, i.e. because I've perhaps taken partial profit and I've been able to move my stop loss to break even, then it's a no risk trade, so I can absolutely enter more trades at that point, sticking to these rules. We'll only scale into trade when price has retraced to again to key support or resistance level and supported by fib. So that's basically I will absolutely refine this more. There's more to add to this, but this is the basic structure. So let me go back to this. So what we're talking about, this was actually a trade I took yesterday and closed off this morning. So what I'm looking for, my trading strategy is very, very simple. I've already shown you. First thing I'm going to do is identify we're in a trend. I can switch to higher time frame or just scroll out on the current time frame. Any confusion? No, we're in a downtrend. Great. So I'm in a downtrend. It's a trend. If it's ranging and it's not clearly definable as a trend, I'm not getting in. End of story. I'm not interested in getting into ranging markets. I'm looking for an asset that's clearly trending. Here we've got a clearly trending asset. The next thing, what we're looking for now is I got into this trade right in about here. Okay, so I had watched this. So are we in a trending market? Yes, we're below the 50 EMA. This is the 50 EMA we've got here. The reason I want to be below the 50 EMA is you can see, although we're on an overall downtrending market, this is clearly a retracement if I was looking at a higher time frame. We're above the 50 EMA and the price is rising. So for me, that would be on a higher time frame. If I was looking at the 4 hour or the daily, it would be a retracement within. So you might have an overall downtrend, but then it retraces back. Down, retraces back. I don't want to be entering a short position when it's retracing back. So this just simply tells me that this would have been a retracement on a higher time frame. I need it to cross back down below the 50 to know we're now on the continuation of the trend after the retracement. Just as simple as that. I'm not reading too much into it. Are we on a back in? We've finished the retracement. We're back in line. Price action is back in line with the overall trend. Yes, because we dropped below the 50 EMA. So that's it. Okay, with that being said, let's have a look at what made me enter that trade. So first things first, I saw a break in price structure. So if we have a look over here, we can see, I'll bring it right back to, I'll bring it back to about here. We can see we've got a clear area of price structure here. You know, this is ranging for a while, then broke that quite aggressively. A good, you know, good positive movement with a lot of downward bias, which is fantastic. And then we saw a retracement back to that key level. So this is now acting as a key resistance level. So absolutely, and you saw again struggling to break this level. So started doing this, and I started watching this very, very closely at this point. The 50 EMA has come down to me, and the 50 EMA is really acting as a dynamic resistance line as well. So we've got a dynamic resistance line in this resistance price action zone, if you like. So again, that suggests we could see a move to the downside at that point in the continuation, unless price broke above. You know, it kind of floated around, but never really broke above. The other thing was as well was my stochastic here. It's not the stochastic RSI or the RSI. It's just the stochastic. Was up into what I call overbought conditions, and I was waiting for a cross down. So I had a multiple factors here. Plus as well, you know, another thing we talked about fib levels. I checked the fib against this price action zone here. Now where did I start my fib? Where the move that broke the key resistance or key support level, which was here. So this was the move. This was the high here. Let me just pull that down. This was the high that started the move. Yeah, it's broken down. It's come back and retraced back to the key support area. So this is where I start my my fib retracement. and you see it's actually retraced right back to the 786. So look at all these factors we've got to suggest. It's just a suggestion. It could have broke up. I could have got stopped out. But what have I got? What confluences have I got to suggest that this should be a good short trade? We're in the downtrend. Yes, we've broken price structure to the downside. We've got retracement back to key price level, acting as resistance, supported by the previous price structure and the 50 EMA acting as a dynamic resistance line. We're at the 786 fib support level, and we had a cross down. At this point here, we had a cross down of the stochastic to the downside. So this is where I entered my trade, right in here. So I entered the trade right in there, set my stop loss just above the high that started to move. It normally do a couple of pips just above, and set my target normally the body, the base of, not the wick, but the body of the low of the previous move, which was here. You see that gave me a 1 to 2.37, so absolutely beats my minimum 1 to 1, and that's it. That was, I entered the trade there. You see it immediately went into profit. There was a bit of retracement, but never went back into drawdown. I actually closed the trade out, if I'm being honest with you. It was in about here. Where was it? I got a 1 to 1. I got a 1 to 1, and I closed the trade out. Simply because I wasn't sure what price was going to do next. I was getting quite low. I could see, it looked like the stochastic was crossing back up. I could have let it run. You could say I could have got like 1.5% there, 1 3/4. I still think it's going to hit that target. I still honestly believe I may look for it to trace back to this level and re-enter the trade. But I'm above what was required of the demo account anyway. I'm already, I've already blown the required minimum profit out of the water. So I just took my profit. I took my profit and ran for 1%. So it was just under 1% by the time you take off commissions. So it was like $480 odd or something. That was it. Simple trading strategy. I'm keeping it simple. I simply look through the charts and determine a strong trend in trade. There's another way, another tool I'm using. Let me just close that down. Let me switch screens quickly just to show you initially. So when you're screening, people, a problem I've had before is screening pairs and trying to determine which pairs I want to even be looking at. So one thing I found, which I think is brilliant, is this currency strength meter. This is on livecharts.co.uk/currency-strength.php. You can see it up here. Yeah. I can put the link in the description of this video. So let me refresh this. So I am sitting down right now and looking at these charts. So right now it's telling you what is a strong currency and what is a weak currency. So for example, if you were looking at USD JAP pair, what would we expect to see on a USD JAP pair? Strong dollar, weak yen. Yeah, simple as that. What about CAD JPY, odd CAD? Yeah. So this is it. I'm looking at this. First and foremost, I'll look at this, and when I then go and look at the charts, I've got an idea. Initially, I might look at these initially, and then obviously diversify, and then look at more charts. But certainly for initial screening, I jump on and go, oh, what might I look at right now? Oh, let's have a look at UJ. Okay, let me switch back my screen. So I would simply come here, and say, there's UJ there. Let's have a look at UJ. Now, what did I mean? Look at that. You see it's live. UJ suggests we should be seeing a strong uptrend. Strong dollar, weak yen. Fantastic. So before I do anything, sitting there, click through one pair, next pair, next pair, next pair. I simply can prioritize what I'm going to look at. If I don't see anything in them, I can then diversify out into other pairs. But initially, I'm looking at that and going, we are in a strong UJ. Look at that. Strong dollar, weak yen. We know that because price is rising. Any confusion about the fact this price is rising nicely? Look at that. Absolutely brilliant. Yeah, we're on a brilliant move up at the moment. We see we're in the start of the London session. So where did this move start? This move started here. So if I was to draw a fib on it at the moment, I'm not saying this is going to be the high. It may go higher. So what would I be looking for now if I'm looking at this over the course of today, over the next few hours? What would I like to see? Or maybe it might even go into tomorrow. What would I love to see? I'd love to see price retrace back to this level. Simple. Yeah. Oh, let me draw that box in. This price zone here. Love to see the price retrace back. I'll drop my box right there. This is subjective, how wide you want to make the box or whatever, but this is a general area. So it covers the top of this wick, it's covering this, which is acting as resistance, come in, price action here, a lot of price action about here. Clearly that is a what I call a key price action zone. I'd come down, hope to see that acting as support. We are kind of between the 38.2, bit annoying, and the the 6-1-8. To be honest, it's on the 50, which I just took out because it was too many lines. But still, if we can get price coming back to this level, and just say at that point we've got the 50 EMA, maybe something like this. At that point, if this has come down, where would we expect to see the stochastic? Perhaps the stochastic's down here and it's turning around and looking to come back up. You see a crossover of the stochastic. Now, wouldn't that be, just looking at that simply, would that suggest to you a long trade to get into? So, I've overthought this before. What if it's the top? What if it reverses? What if you enter then shorts out? Well, if it enters and it shorts out and you get stop loss, then tough. But what are the chances? What are the percentage chances of this going in the direction you want it to go? Especially if, I might just come back to this because you see there's some at the 38.2 here. You see it may only come back here. Now that wouldn't be as good for me. I would still maybe look to, especially if this was already crossing up. I'd love to see it to come back to this price action zone. That would just be the perfect trade, if you like. Problem is, when entering here, it could then, you might enter here, and then it obviously comes down to this level anyway. So, and to be honest, the 786, and there's some key price action around here, though I wouldn't expect it to come that low. If I'm being honest with you, just looking at this, I think this is really strong zone. I would expect it to come back here before price then retraces back to the upside. However, it could come down to this 38.2 level and come up from here. This is the, where do you enter? This is the problem often, is where do you enter? Me personally, I'd be looking for it to come back here. At that point, hopefully see the stochastic has come down and starting to cross back up. If we're supported by the dynamic 50 EMA acting as support, we're at this price structure area here acting as support, I would absolutely be confident to take this trade. If we can get in about here, for example, yeah, and look at this would just be fantastic. To be honest, the problem is, would you get a 1-to-1? Because if I was to come down below here, following my own rules, let's say 47 pips, and come up to the previous high, yeah, I can just get a 1-to-1. So if it does come here, another reason I want to come here rather than reacting off this 38.2 and rebounding is because there wouldn't be a 1-to-1 risk to reward, so I probably wouldn't enter if I am being very, very strict with myself, which is very, very hard, of course. But this is why I've had these consistent gains. Is because I have been fairly strict with myself on my entry, not necessarily on my exit. I've been often taking profit early when I could have let it run. I could have easily been above 10% at the moment. I'm just below it, as you see. I could have easily been above 10%, but well above the 5 that that they're looking for on this demo account. So that's it. Again, having a look at this, are we in an uptrending market? Yes, we're in an uptrending market. Price has broken. Here we see it has broken this previous price structure. If it then retraces back, supported by the EMA, supported by the price structure, hopefully supported by stochastic crossing up, supported by a fib level, well, not almost supported by a fib. You could argue if it comes down to here, even the bottom of this is on the 61.8. So if it comes back to here, for example, more at the bottom of this range, which would be even better because that would give you a better risk to reward level then. That'll give you a risk to reward of 1 to 1.36. So if you can come back to this, get supported by the fib level, your resistance. Again, it's subjective. What if you drew your resistance zone into there, for example, make it a wee bit wider, covering the bottom of these. Again, just where you want to draw, covering these wicks here. So that might be your resistance zone, in which case it does take in the 61.8 fib level. So if price comes down to here and then rebounds on a crossover stochastic RSI, for me that would be a high probability trade. Yeah, you could of course get stopped out, and that market can reverse at any time, but that's why you set your risk to reward. But if you've got a win rate, if I switch back to here, if you're getting a win rate of, as you see here, nearly 90%, then if you do get stopped out occasionally, tough, just take it. This is what I'm learning. Before, I got frustrated. You cannot win every trade. It's as simple as that. But as long as you're generally, I'm at least a 1-to-1, often a 1-to-1.5, 1-to-2. So my wins typically have a higher percentage gain than my losses would have. Also, I have a higher win rate. Your win rate is over 50%. It's nearly 90% in my case. So for me, this is seeming to be a reasonably strong trading, not just strategy, but philosophy as well, of how to deal with the market. Understanding that what is price likely to do, what are people likely to continue doing, based on the evidence, the historical evidence of the price action up to that point. Yes, the markets can suddenly flip, and you can get stopped out. But again, if this does what I'm suggesting it may, if it comes back to this level, then you do actually start to see, like here, reaction, and price is struggling to drop below this level. It's supported by the fib, it's supported by a dynamically moving 50 EMA, which is respected in the market, and the stochastic does come down, especially if it comes down below this area and comes down into what I would call down here into oversold conditions before it crosses back up. For me, that's a lot of pressure to suggest, in my head at least, that we should see a continuation of the trend and then a move back up. And of course, if that then happens, you win the trade, and you just manage the trade as you go. Perhaps you could, my trading strategy is going to be closing out 50% of my position at 1%, and moving my stop loss to break even, normally a couple of pips above, just so even if it does come back and hit the stop loss, you still got a couple of wee pips, but as good as break even. I've been considering, for example, scaling out, so maybe when it gets to 0.5%, taking out 0.25% of the position, and then if it gets to 1%, taking out the other quarter, so that but I don't want to move my stop loss too early, so maybe move my stop loss up 50% of where it is. So these are things I'm still looking at, but at the moment this strategy has been working well, as you can see. Yes, so that's where we are at the moment. My strategy, as you can see, is very, very simple. Look for a break in structure, look for a retest of that structure that was broken. Make sure we're still, long term, we're looking like we're still in the direction of the trend, in this case an uptrend. Supported, hopefully this structure, which was previous resistance, will act as support, supported by the 50 EMA dynamic, if you like, a dynamic resistance or support line. Supported by a cross up of the stochastic, and we're at a fib level as well. All these things would suggest to me that the price would continue in its current direction of travel. Now, this is completely free. This is just what I'm doing. This is what I'm doing that has allowed me thus far on this challenge account to grow. I mean, no one would argue that this is a lovely looking equity curve at all. It is a lovely looking equity curve, as you can see. If I refresh this, this is genuine and live. Nothing to hide, because I don't care if you follow me or not, because you've all got to find your own path. I'm simply showing you what I'm doing, and how I got here and where I am at the moment on my journey. If you want to follow along, copy, emulate, modify or improve, please do. And if you can improve it and get higher than 8 to 9% win rate, or higher profit within the win rate, then let me know what you're doing, and I'll adopt it if I think it's got worth. For me, as much as I'm trying to teach you, if you can teach me, I'll absolutely take it on board. This is a journey. This is not me being a guru, because I'm certainly not. This is my personal journey to get consistent growth and pass the FTMO challenge. Now, saying that, very quickly, you'll probably see my next video will be my entry into the FTMO challenge rather than the demo. Now, funds, as I have been on lockdown from my job now since just before Christmas, so we're nearly in April, so that's 3 full months. So my resources, financial resources, are slim at the moment, I'm not going to lie. So I probably, to be honest, cannot afford to take a 50k challenge. It's about £350. I do not have that spare at the moment. That's a lot of money for me, so, which is annoying, because I'm really happy with my strategy, and I think I'd love to get in, because obviously if I can get funded on a 50k account, I can make a good living from this until I can get back to work, or maybe eventually replace my work and do this full time and grow the 50k account until I get enough money to perhaps buy a second challenge and past that, have 100k to play with, and keep doing it and build up to the maximum FTMO allow, which was 300, maybe he's gone up 350 or 400,000. So obviously if you start with a really small, like a 10k challenge account, it's going to take a long time to grow that. But to be honest, I'll be struggling to I can possibly afford a 25k account. So I think that's about £230. It will leave me a bit short, but not completely and utterly skint until I get more money in. Got to think about paying those bills and getting some food. I did sell some Tesla shares, or not entire shares, but fractions to get some money in. Should arrive in the next couple of days. So I may be happy to go for the 25k account, which is obviously half of what this demo account is. However, in saying that, I mean, let's be honest. If I can pass a 25k challenge account and I can make, say, half of this, then so you'd be talking about over $2,000, $2,000, whatever it is, $2,200 in 6 days, multiplied roughly by 3, so $6,600 in a trading month. 22 trading days thereabouts. That would be 18 trading days, but never mind. So say 2,500, 3,000. Sorry, where are we? $6,000 or $7,000. Even 70% of that, which is what you get to keep, is a good income. And then obviously you get your challenge money back. I could then put that in. If you pass and you get a profit share, you can then put that back into your next challenge, which is what I would do. So yeah, I think I will try and squeeze it up enough to get a 25k challenge account. I'd love to just do a 50, but I've done that twice before and blown them, so it's a lot of money to blow. But I feel confident. Put it this way, if I had the money, I'd go for a 50k account. I feel confident in my trading strategy, my philosophy, and just my own discipline and methodology now, to be disciplined enough with myself not to do stupid things, which is what I did in the past. So with that being said, the next video you may see after this will be me getting my challenge account, either a 10k if I feel I can't really stretch out, or if I can stretch out a 25k. I certainly can't afford a 50k challenge account at the moment. Even if I get my money back in 3 months or whatever, 2 months, I've got to consider living and putting food on the table until such time, so I don't overstretch myself. I will leave my video here. I hope you've enjoyed it. I'm trying to be as honest and candid with the people that see this video as much as I can be. There's no pretense, there's no grandiose or grandeur here. This is simply me doing what I'm doing, explaining to you how I'm doing it. Hopefully it works for me. If you come along and have a similar trading strategy to what I'm showing you, I think it's a solid strategy. There's obviously billions of different strategies, but using a combination of price action, so i.e. market psychology, what the market's doing, what it should do based on historical price action up to that point, supporting it with well used and well understood indicators that a lot of institutions use as well, like the 50 EMA, fib levels, of course. Not overcomplicating it, sticking to one time frame, just looking for a general bias within that time frame of direction, and then looking for entries based on the fib, the price action key zones, support and resistance levels, the EMA, and a simple stochastic cross to suggest that perhaps the move in the direction of the trend is now happening. It's not going to continue running sideways forever. Yeah, that's it. It's a simple strategy, and I think that's perhaps key, not overcomplicating it. It seems to work for me, as you can see looking at this chart here. It has been working for me. That is a nice equity curve. I've never had that on any of the challenges I've done before. It's kind of been like this, like this, like this, like this, like this, like this, and generally going down, because when you start seeing it drop. The hardest thing is when you go into negative equity to not overreact to that. You try and revenge trade and get your money, and that I was absolutely 100% hand on heart guilty to that. So I think, to be honest, it's not just about your trading strategy, it's about your own personal trading psychology, your strength of mind and character to not overreact to an adverse situation or a positive situation. It's so easy to see it going up, getting greedy and not closing out a trade perhaps when you should as well. So it's about being more level-headed, I guess. I'm definitely more level-headed in my trading now. Hopefully that is going to continue to stand me in good stead when I get the challenge account. Hopefully I'll pass the challenge and verification and actually become a funded FTMO trader. That is my goal. I will get there eventually. Whether I get here on this particular occasion or on a future part of my journey, I don't know. As I said, this is just my journey. If you're interested in my journey, perhaps want to take your own journey along with me, I'd love to get into a dialogue with you guys, have a chat, see where you are at and what you are doing. You can always comment below. I try and respond to every comment, and if we can do this together, because as I said, I'm not a guru. I don't profess to be a guru. This is me feeling like I'm starting to get a handle on forex trading properly. I mean genuinely properly, not just on the strategy but on the psychology of it as well, and hopefully that will allow me to be successful, and that success can be transferred onto you guys as well, if you can have a similar mindset and join me on this journey. So I hope you've enjoyed it. There's no financial advice. Got to do this disclaimer. I'm not a financial advisor. This is my journey. This is what I'm doing. Hopefully you can learn from it. Hopefully just what you've seen, I've discussed already, has given you an idea on what you might consider doing yourself for that level of consistency, which you need to try and develop as a trader. You want to have your consistent wins, your consistent losses, your consistent risk to reward, so that your losses are greater than your wins are greater than your losses, and hopefully your percentage win rate is higher than percentage loss rate, and just growing your account steadily. And as you can see here, it's growing steadily, has been for the last 6 days, with some genuinely decent trades. You can't win them all, but who wouldn't want that on their challenge account or their verification account, or if they're a funded trader? If I was a funded trader right now, who wouldn't want that? So if that is good enough, in my expectations, then why should I be changing anything? It seems to be working. I'm going to stick to it at the moment at least. So with that being said, I will leave the video there. This has run on 37 minutes now. If you've stuck it out, well done, and maybe consider subscribing to the channel. If you haven't done so already, you could give it a like. It helps the YouTube algorithm. Subscribe to my channel, which would be fantastic, I'll try and bring more content more regularly as well, as I have been neglecting YouTube for one reason or another over the last couple of months, though I am looking to get back to it much more seriously now that I'm looking to again take the FTMO challenge. So FTMO Demo, absolutely blown out of the water. I will take a challenge account very shortly, today or tomorrow I hope. At least 10k, maybe the 25k if I feel I can afford it, I'll take it from there. So I'll leave the video there. Thanks very much for joining. If you stuck it out thus far and you've enjoyed my rambling, then I'm glad you stuck it out. I'm glad you found worth from the video. Take care of yourselves. If you've got any questions, as I said, leave a comment below, and I'll certainly get back to you, and good luck with what you're doing as well, and I hope you all success in the future. Thanks very much.